everyone, there's no doubt that the election result was a big shocker for the stock market. I mean, everyone was expecting a strong majority of BJP government, especially after the exit poll results. And the market was already paying a premium valuation to themes supported by government capex policy with the anticipation that BJP government would continue their capex policy in third term. And that would strongly benefit all capex related themes. However, the election outcome is that BJP would remain in power in third term, but it would be a coalition government. Now, what does this signify? Does it mean that good days are over for capex theme? Or capex theme would continue to outperform? Here the big question is how to realign the portfolio. Also, there's a good correction after the election outcome. Is it a buying opportunity or should you hold or sell? Another question is how will FIs take this mandate? There have been a huge seller from Indian market, so will they continue the selling or eventually come back? So in this video, I've tried to share my thought process, but only as a long-term investor. This is not useful for traders. Alright, let's get started. First of all, if you're a long-term investor, remember one thing. Indian growth story is 200% intact. Over the last 40 years, we have witnessed multiple changes in government, crazy events like COVID, dot-com bust, many scams, corruption cases. We have been at war with neighbors and what not. Yet every time the Indian stock market has made a new high. So there's no doubt on the growth prospect of Indian economy. Yes, there can be volatility in the short term, but the long-term story is completely intact. So that's my first message. If you're a long-term investor, there's no need to panic. My only advice would be to keep the expectations realistic. Over the last few years, the way stock market has created return, everyone is expecting 40-50% kind of return on year basis. Now that is not a right expectation. If the economy is growing say 7 to 8%, you add 5 to 6% inflation, then stock market return should be in the range of 12 to 14%. And historically, that's the kind of return Nifty has generated over the last 40 years. Is that bad? I don't think so. There's no other asset class that can generate 12 to 14% CAGR return over the long term. So the stock market is the best asset class for wealth creation. The only problem is that majority of people think of stock market as gambling and have unrealistic expectations. Yes, mid and small cap segment has rallied exponentially and created a lot of wealth, and especially this rally has come from a few specific sectors. Especially the capex related sectors have outperformed big time. But I've been raising this concern over the valuation of some of the hot themes. Personally, I felt valuation become a bit heated in some of the hot themes due to the ongoing euphoria in the market, and everything in the market reverts to the mean. If stock market goes up too much, it eventually corrects, and the reason could be anything. And if the stock market falls too much, it eventually rises, ultimately rewarding only the ones that remain invested with patience and conviction. Anyway, the question is, should you realign your portfolio after the election outcome? Is it time to reduce allocation from the capex theme? To answer this question, let us take a step back and try to understand the overall market dynamics. So broadly, you can categorize the Indian market into two segments. On one side, you have global segment and another side is domestic segment. Global segment include companies that generate majority of business from global market. It includes your IT, pharma, then textile exporters, some chemical exporters. So these are the few sectors that have dependency on global market. Then you have domestic segment that can be further divided into your capex and consumption theme. Capex includes sectors like infra, defense, power, railway, capital goods that generate major business from government spending. And consumption includes sectors like FMCG, consumer durable, retail, auto, domestic textile, and so on. Banks you can divide into private and PSU bank, where private banks are more inclined towards the consumer side, that is consumption theme, and PSU banks are more inclined towards the capex side. Now, if you look at broadly, out of global versus domestic segment, global segment has been an underperformer for a while. And this is because global markets have been struggling for a long time. Especially the US market has inflation problem, high interest rates, and the growth rate has been very slow. As a result, global segment has not done well for a while. Now coming to the domestic segment, out of capex versus consumption, capex has been a huge outperformer in last 2-3 years due to government focus on sectors like infra, defense, solar, railway, and so on. And consumption is a big underperformer mainly due to higher inflation that resulted in fall in rural demand. Due to all these developments, the valuation of capex stocks skyrocketed. But consumption stock valuation has seen very good correction. Mind you, consumption is one of the biggest wealth creator theme in India in the last 40 years, and consumption companies, especially FMCG company, are cash generating machine with very high ROCE. Whereas capex has always been a low profit business, And that's where after the election verdict, market sentiment is now tilting towards the consumption theme. Some of the consumption stocks have already jumped significantly, including HUL, Dabur, etc. By the way, I recently did a video on consumption theme. I would strongly recommend watching that video. Moreover, I also recently did a video on EID parry transformation from sugar to consumption focused company. That is also a must watch video. So overall, the latest development is that market sentiment is now tilted back to the consumer theme because A, there's a good valuation comfort, and B, because there's expectation of good rainfall. So that would help in improving rural demand that looks like it has bottomed out. As far as global theme is concerned, IT index has also corrected in last few months due to slowdown in US. And I recently did a video where I mentioned that if you're a long-term investor, IT can be a good contrabat in FY25 and worth trading systematically. Eventually, when US market will recover, IT sector is bound to do well. And so is your global textile company, as well as pharma is also looking good. So overall, you need to look at your portfolio and figure out your allocation towards each of these themes. If your portfolio is more skewed towards your capex and you don't have consumption or global theme, maybe it's worth diversifying your portfolio. By the way, this is a great lesson that market has taught yesterday. Never keep all your eggs in a single basket. We all know this thing, but sometimes we forget to implement it due to FOMO. Personally, I have always diversified my portfolio and openly said that IT and private banks are my biggest allocation, followed with consumption. In fact, I did a video on how to build a long-term versus short-term portfolio and clarified that as a long-term investor, you can have a core and satellite portfolio. Your core portfolio should have long-term themes like consumption, financials, IT, auto, which is for long-term wealth creation. And you can always play around with satellite portfolio with hot themes, but keep a fine balance. In fact, I recently shared my own portfolio detail in my exclusive series where I highlighted my portfolio and my investment strategy as a long-term investor. So I do one exclusive video for close community of long-term investor where the idea is to share my knowledge and my own investment strategy. You can explore it on my website or via the join button on this channel. As far as capex theme is concerned, many stocks have corrected heavily after the election mandate. So my take is that capex story is very much intact. It is just that valuations exceeded the earnings due to euphoria and there was a lot of froth. I even tweeted about it and I've been quite vocal where I clearly highlighted that majority of capex stocks have become expensive. So on one side, capex story will continue, but the question is, will market pay that premium to capex stocks the way it used to pay before election outcome? I doubt. And also this theme has created huge wealth for investors. So there will be profit booking until valuation become reasonable. On financial side, I recently did a video on private versus PSU bank and clearly said that I find PSU banks expensive. There's a huge return generated by PSU banks due to their undervaluation, but now I don't see a lot of valuation comfort. Whereas I really like private banks. There's a lot of valuation comfort. So you can watch my previous video. Again, the lesson is diversify. Never get carried away with noise. So my take is that if you're a long-term investor, you don't have to worry too much. Market will eventually bounce back. Just that keep a diversified portfolio and have conviction on your investments. In fact, the correction actually creates buying opportunity. In my recent video on election strategy, I mentioned that I'm sitting on around 15% cash and now I'm utilizing the opportunity to deploy that money systematically. Finally, my take on the overall market. Nifty has corrected sharply after election verdict, but today there's a strong recovery. Now going forward, a lot would also depend upon FIs. There have been a huge seller from Indian market and the major reason is expensive valuation of Indian market as compared to other countries like China or Japan. Obviously, they were also worried about election outcome and have sold investment worth 5.76 lakh crore, that is roughly around $70 billion in last 3 years, including the recent sell-off. Although the new government would be a coalition government, but if you look at the history, India always had a coalition government before the last two governments. In fact, the biggest bull rally Indian market has seen was during 2004 to 8 under the leadership of Mr. Manmohan Singh, and that was a coalition government. So I don't see any major issue in that. Yes, there's a bit of risk, but I think FIs would eventually start investing in Indian market. They have to come back. They can't ignore India, which is the fastest growing economy. And if they come back, I think one sector that can do really well is private banks. Again, I have done a video on this recently. I strongly believe that Indian private banks are now looking very attractive. So this is it for this video. All I wanted to share is that if you're a long-term investor with a diversified portfolio, there's no need to panic. In fact, any correction should be utilized to invest systematically. Yes, you need to keep an eye on valuation and some of the hot themes, especially from PSU space that has zoomed exponentially and profit booking is obvious. But as long as you don't have overexposure in hot themes, and as long as you have real long-term wealth creating themes like consumption, IT, private bank, auto in your core portfolio, you should do well. Having said this, you can still keep some capex stocks in your portfolio, but watch the valuation. Now tell me in the comments, are you utilizing this correction to accumulate stocks? And if yes, which stocks are you adding in your portfolio? If you find this video useful, do share it with your friends. I'll see you next video. Till then, take care.